It was subtle, but I liked it. It's a
You like
Lord of the
that?
Rings reference.
Well, I told you I know that the last
Right.
time my intro, like they blew up my video when I did the Lord of the Rings intro.
Right. So it has to be more subtle.
Yeah. So
Right.
they don't give
Dude,
no
I
F's about
can't
Lord of
believe
the
how
Rings.
no. I can't I was gonna say I can't believe how like I don't know if litigious is the right word or just like intense, we'll say, some of these companies are. Like, have you heard about everyone? Like people can't stream the Republican debates. Like
Oh, really?
basically if you try to stream it, Fox just shuts down your entire Fox will just come in like Meet Kevin was one doing it. There's a guy I watched called Destiny who was doing it, and both times like Fox just came in and shut down their stream. Like
Yeah, I know Lord of the Rings, Star Wars, Marvel, anything. Like they come Star Trek too. Paramount comes for your soul. You post anything. You even review a Star Trek like show episode, like Angry Joe. Every time he posted reviews of Picard, he gets struck down. But
really, it's insane. I wonder, must be a critical drinker, must not be reviewing those either then. But anyways,
so you're back,
I
right?
digress.
You went on a trip to north.
Yeah,
Heard the great.
well, anywhere is north for me. But yeah, we went to Denver, so that's where the conference was at. And I'll say like Denver it's a lot different than because that was my first time actually being in Denver. It's not technically actually in the mountains, but it's a lot warmer and a lot sunnier than I would have thought. They were telling me they get over 300 days of sun a year. It's like super sunny. So even when it snows, like the snow melts pretty quick. Now it's also like it's like 30 minutes from the mountains. So it's like literally like at the base of the mountain. So you just like go up and you're in Breckenridge and everything. It's a really cool.
My buddies, we planned a 40th birthday this year since we all turned 40. So we were like, where are we going to go? And one of the top 3 finalists was Boulder, Colorado, which is where I really wanted to go. Because like I've never done that part of it. Like I've been to like 45 states across the country 3 times with my family, but I haven't done like the Colorado, Utah, Nevada. You know, we kind of went above it and then we went below it. And
you know,
I haven't one part of America I've never seen. But
people have told me now the drinking rules are weird, but I've heard Salt Lake City is actually really cool if you're talking about Utah. But like, I don't know.
Dude, every state has different drinking rules. Like, it's fucking annoying.
Oh, it's really stupid. I remember like our state, like I go to brunch or like go to breakfast with my wife on like a Sunday after church or something. And it's like, we can't drink alcohol until 12. Like, really? I can't have a mimosa right now?
Like, oh God. The best, well, like, yeah, you go to like Maine and the beer liquor stores are combined in the grocery store, but they're like a separate area. And then you go to like Rhode Island, you have to go to beer stores only. And they're like away from nothing attached to them, a specific beer store. So they're
it's the same thing in Carolina. The state runs all the liquor stores. They're called ABC stores. So they're the only place you can go to get liquor. And they all close really early, like relative to when people are drinking. So it's like you forgot to plan your night out. Well, buddy, you have to go to a gas station or Walmart and buy some beer because you're not drinking any liquor.
What was the weirdest? New Orleans, we went to a CVS to get liquor. So you go into a CVS and like usually where there's like inflatable kid toys in New York, it's just booze. The whole just booze, like 30-foot aisle of like everything you can imagine. It was like, it's just kind of weird because New York, like drugstores can't sell any of that, like zero.
No. So what you're saying is that CVS should sell all their stores except for the ones in Louisiana, and then
they sell the Louisiana stores. If they close those, they're screwed.
Sure.
Well, yeah, that wasn't a topic, but yeah, what are they closing? Like 900 stores. So
is that how many they're closing? Goodness,
I think it was. I didn't look into it because we didn't want to talk. We weren't talking about it, but
no, you're fine.
I don't think either of us
wants stores. Wow.
I mean, yeah, those 2 businesses should be in survival mode, honestly, and they're still terrible businesses to invest in. But
it's weird because like I want to like CVS because it's like cheap and it's like a trap stock. It's one of those things that like you see them everywhere, so you just assume like they're everywhere. It must be
Yeah.
good.
You see the
But
line
that's
of
not the
people
case.
getting drugs through the drive-through. You're like, oh look, they give drugs out all the time. But then it's like everyone gets a big slice of the pie down the chain for drugs until you get to CVS and Walgreens, and it's like they
Right.
just get the littlest little sliver of the drug business. So,
No, exactly.
but
And no, and how much little money they actually make. Well, as an illustration, at the conference, one of the things we talked about was real. There's a company there, they're a consulting company, and I like what they do. Is they're like because one of the things they were talking about was like what they call like real ESG investing or ESG investing 2.0, which is like get out of these stupid. Well, no, theirs I actually liked. It was get out of the dumb sleeves that these ESG companies put you in. You like their whole service is you call us, you tell us what you don't want to invest in, and then we like review. They don't actually give you products, but they review your portfolios and actually like get you in contact with people that can actually like design it that way, which I thought
like
was really cool.
like I could point someone to businesses that have a really good shot at changing the world. I would say for the better. Like I have a
Right.
lot of stuff like decarbonization future bets, but like to say ESG, like to get that whole
Well,
basket. Like
it,
what's
they
the
called it
governmental part? I never understood the
the
governmental part
governance.
and
Well,
the
the governance.
societal like benefit. Well, decarbonization would help
Well,
society, right? So I don't know.
well, that's the whole thing. Is like, isn't most ESG sleeves? It's basically like the SP 500 minus oil, which I can go on a whole rant on how I think oil. Like, it's the most hypocritical thing to be like, I'm the CEO of this company. I just flew here on my private jet, and then I took an Uber here, and then I'm in a building. All of this is being done by fossil fuel. Like, and then I'm gonna be like, don't invest in this because it's evil. It's like it's not evil. I don't know what the whole thing is about that. Now, the evil thing about oil is that when it goes up, the rest of the market is bad. That's probably the worst part about oil. So,
I used to be interested in hydrogen, but then I looked at like what Exxon and Chevron are doing and ConocoPhillips
Mhm.
to a little degree. And I'm like, the oil companies can just become they're energy companies, right? They're not
Right,
just oil companies. They
exactly.
they're in the energy business. They could flip a switch with their resources and start doing hydrogen.
Oh yeah.
Now, obviously, the question is, it probably wouldn't be green hydrogen. They'd probably start off with the nastier versions of hydrogen that aren't so
Mhm.
environmentally friendly. I think they call it gray hydrogen, but you know they can build out these facilities. They can buy out competitors. So like the small hydrogen people in the space right now, I'm like, I don't think it's a compelling investment. You'd be better off, I think, just sticking with the oil companies.
Well, yeah. I mean, you're there are companies that are like perpetually at really cheap compared to the market multiples. So as long as I mean, they're obviously commodities related. So you have to have a feeling on the commodity directionally, but um, I would take that over like some spec like only renewable um, company
Yeah, the
because
debt, because like the debt you have to take on to make green
yeah.
hydrogen. You got to get the solar panels. Everything's got to be certified as no carbon emissions. And then you have to store the hydrogen. It's just like all those businesses are so laden with debt because there's not a business
Mhm.
for that hydrogen yet.
And
Their big spiel is we're ready for it when it comes. Like
no, and that makes so much more sense because the other thing that's happening right now is like there's a lot of investment going into it, but there's no guarantee that if you invest a lot of money into it, you might find a solution, but it actually sucks in comparison to someone else's solution. And then you're just like, oh, now we just spent billions of dollars and have absolutely zero to show for it.
I saw this car that got demoed. I can't find the video. It was like last week. It was some European company, and instead of a tank for hydrogen, it was like fuel cells that they inject into the trunk. And I was like, that was because that's the biggest problem with hydrogen. Like the fuel cells are very expensive.
Mm,
And then also just putting you know the hydrogen in your car is kind of complicated compared to just a gas pump. It involves like super cooled hydrogen, but to have just like a figure like a suitcase, a little tiny aluminum suitcase, right?
mm,
You just put it in the back is what this
right.
car. I can't find the video, but that was intriguing. But then it's just like, yeah, but you don't need to get in on that before it happens. I don't see why.
No, and like realistically, these energy companies, they have enough capital where if like someone comes out that has the right solution, they can buy them out.
Mm-hmm.
And then
Yep.
McBuda's talking about McBuda T. I don't know, Thresenkrupp Nucera is a fairly interesting hydrogen company. I don't know anything about them.
I know one hydrogen company I shorted the crap out of.
Who's that?
Plug Power.
Oh, yeah. Were you
They
on?
the way they account
McBuda,
for their costs and the hydrogen, questionable. I'm not going to say what for
well,
legal
isn't
purposes.
it? Wasn't that the whole like thing? Is that they didn't they get like a big fine or like there was a big deal because they had like accounting issues or accounting fraud? I don't know if it was fraud, but
So
it was.
it was KPMG, and they sued them for the they did their audit one year, and then Plug Power sued them regarding the findings. So I'm like, yeah, pretty sure that's a problem.
Ooh.
They're suing the accountants to say that you're wrong. But that was just another nail in the coffin.
This company Thresenkrupp Nucera, did they just IPO? I'm just looking at them here. Are they just super illiquid? Is that? No, it looks like they just IPO'd. And then I also like Elemental Tamago's question: why is Peter Schiff still wrong about gold?
Oh, did he? Well, he's always gold dude.
He's a gold bug, and it's the only way you can like sell gold is to sell fear. But I think at that point, then like you have to be selling like physical gold, don't you? And then I don't know. The other thing too is why would you ever want to buy gold when there's positive real interest rates? I don't know, but
I know at this point where we're I changed my online savings account from my credit union to Barclays. They gave me 4.35%.
Oh,
like what more do you want these days? It's pretty damn good, actually.
what I do with our savings is like we have 90% of it just at Fidelity sitting in a money market account there, so we get like 5%. I need to like transfer it back. It takes like a day. I'm like, hope I don't have any emergencies where if I don't transfer the money back same day, I'm screwed. But we'll see. I'm not quite as bad as Paul. I have a savings or an emergency fund.
I have emergency credit cards and savings, but I wouldn't call it emergencies. It's just savings to me because
right.
Like I can't get fired. I can't imagine how I would get fired.
No, because you're union, right? Yeah.
I have credits through the military too. So my time in the state, plus I have like 5 years of bonus years for layoff purposes. So it's like they would never get to me on the layoff list if it ever happened.
Right.
So I don't know. That's why like Strongman's video, it's like there's nuance to this rather than just saying put all your money in the markets, all of it. Like what was it? Somebody Slurpees was like, okay, then why pay your mortgage? Just live in your house till they kick you out because you're losing money from the market. You could put that money in the market.
So is that Strongman's argument? Is that you should have everything in the markets, even your savings?
No,
like your emergency fund?
That was Paul. Strongman's like you should have an emergency fund, but depends on your situation, how like many months it is.
Yeah. Oh, I agree fully. Like how secure your job is, or even like how secure yours and or your spouse's job is. Like there's so much.
Should we like maybe just don't say emergency? We'll just call it personal savings because it's like I came home from vacation and my fridge just like killed itself, right? And then I got all new appliances because the oven was on the way out too. That was $3,500. So
yeah.
So I had a credit card and I had savings, so I could decide how I wanted to do it. But
yeah,
I have an option. I always like to say have options.
One of my biggest gripes with Dave Ramsey is he's like, if you're in debt, you should only have $1,000 in savings. I'm like, dude, $1,000 is nothing. You like need a car repair, you're screwed.
Oh my god.
And plus, like the other thing is he's never adjusted that for inflation because I feel like he's been saying that for like 30 years now. And so it's like,
I'd like to do a series. I've kind of thought of it through, like, I kind of mapped it out of like a 20, a 30, and a 40-year-old checklist.
Mm-hmm.
Like, okay, you're 20. This is what you should do till you get to 30, and then 30. This is what I think. People can say what they want, but like, some of it's a little different from me, but like, I think you should just have money in your checking account. Just look at it every day. You're not living paycheck to paycheck, and you get used to just opening your bank account, and there's $10, $20, $30,000 staring back at you. No, Paul would hate that because he's saying you're wasting time. That money could be in the market. But I would argue, you just need to be used to having money. Because, like, if I talk to someone about finance, the first thing I ask them, how much money's in your checking account, and that tells me a lot about them. If they have like $1,000 or $2,000, I'm like, okay, they're a paycheck to paycheck person. Money burns a hole in their pocket, so I have to like work around that with them.
You mean checking and savings as a combined? Like how much is there? You mean how much is
like in your checking account? Let's say where you have a debit card, you can go to the ATM, you can spend that money. So I would say you should have money in there and just be used to the fact that it's there. Because you go in Best Buy, there's that TV you wanted. You could buy it. So are you going to buy it? Like, and it's more of a mindset training. Like, I've always had like a few $1,000s. Like, even when I was 18, I got up to like 2,000 right away.
Interesting.
As you get older, it should get larger, I think.
So I guess I'm slightly different because, first of all, I'm a credit card person, so I put everything on my credit card.
No, I do too.
Okay. Okay.
All monthly stuff. Yeah, I do it for safety. I don't want anyone to hack my debit card, but
one is for safety, and for me, it's like the easiest way. Like, not that it really matters to make money. Like, if I have to pay something off my debit card, I do. I've had it happen a few times. But we just have like the checking account, and actually the way that we look at it is we don't keep much in there, like over like 5,000, and then everything else I just put into savings. But the savings and the savings is a certain threshold when I transfer that to Fidelity. But the savings and the checking, it's basically one account because you can just transfer it instantaneously. We don't want to get too specific in numbers, but it's more than 5,000 in the savings. So,
but that's kind of like, we talk semantics about what investments, but it's like in America, the real difference is people who save, people who don't. Like,
yes,
and well over 80%, I would bet, of people, right, like, just spend everything that comes in, and it doesn't matter how much more they make. It doesn't matter. It's not. It's just, it's their lifestyle,
right?
And they've never broken from that, and they never will, I guess, unless they hit rock bottom at some point. I don't know. I don't know how you change that. I've never changed. I had a person inherit a bunch of money. I helped them, gave them a budget. They still plowed through $200,000. It doesn't matter. So
no, really, it's really habits. That's why, like, actually, I was just reading something on Twitter today, or X, I guess I should call it. But some guy was talking about, he left Constellation Software, and he's like, I've like 3x'd my income, and like basically how much money you make and how much you save will matter so much more in life than your IRR. So, but yeah, Michael, I agree. I do agree with Michael, is that Dave Ramsey is for people with spending problems. But the thing is that like 80% of people in the US have spending problems. And so it's like, well, he's for the majority of the people in the US, actually.
Who said that, Michael?
Yeah, I think Dave Ramsey's, if you go up a little bit, but right above.
Yep. Yeah. So like, people like Paul or whoever, people hate Dave Ramsey, but like, Dave Ramsey has a solution for paycheck to paycheck people, not savers. If you're a saving person, you don't need Dave Ramsey. If you're the type of person that spends every dollar and then you want to spend the money before you get it, so you go to a payday lender and stuff. It's like, is the payday lender really the problem, or are they just allowing you to do the degeneracy you would do anyways? You'd find a different way to do that. You'd spend money that you don't have. And
so like, my best explanation for Dave Ramsey is like, he's like the bro split for working out for finance. Is like, yeah, it's not actually optimized the best, but for the vast majority of the people, it's good enough. And if they follow that, they'll be better than everyone else. Like, yeah, the bro split kind of like isn't like optimal. If you talk to people, it's like, well, actually, if you look at like protein muscle synthesis, you actually want to do like this and the other. But like, at the end of the day, if you're actually following that process, you're gonna be better than most people.
You save anything. Like,
Yeah.
you're like, my wife and me are like, nobody around us has retirement savings except my parents.
Well,
But that's
props to
it.
your parents.
Hmm?
So props to your parents.
Yeah. So, dude, my dad was in the military and he worked in Canada. So between my parents, Social Security and payments, they get like 5 checks a month from all the different stuff they have. It's
Dang.
freaking nuts. But
Well, and I
yeah, they
know we're
did
gonna
well.
get.
And I was surprised because there was 3 kids and we had a big house
Mhm.
and they managed to save so much. I was like, I never felt like I was wanting for anything. So good for them.
Well, I came from a pretty well. I had a lot of siblings. I think that's why I came from a more humble background. We'll say.
Mhm.
I think I remember the first time I actually got something from a fast food place that wasn't on the dollar menu. I was 17, but that's because I was with my high school basketball coach. I remember we went to Arby's. And he's like, "You guys can get one of anything." It's like anything. It's like, yeah, like get whatever you want. It's like, I mean, I can order from like the menu. He was like, yeah. He was kind of like weirded out by my question. He's like, yeah, like just get anything. Okay.
Arby's is awesome. Like once a
Oh,
month, like once a quarter.
oh, dude, you get
Just
like
get everything on the menu and you're just like, "Oh god."
the Arby's sauce, and I like horsey sauce too. But oh,
It's
anyways,
in the grocery store now. I just saw it.
really, Arby's
Arby's
sauce?
sauce.
Ooh.
But then I look at the ingredients. I'm like, "Oh, that's kind of I don't wanna know what's in it. You've ruined it for me."
My guilty pleasure that I have at my house is Chick-fil-A sauce. But
Yeah, I've seen that too. Yeah.
yeah,
Interesting. Who would win, Dave or Mo? Well, Bacon sent me a video clip, Bacon memes, that, Dave Ramsey was saying it's easy to beat the S&P 500, and he gets like
no,
12% per year or something.
he always says this. So it happens all the time. He goes, people tell me that mutual funds don't beat the S&P 500, but my mutual funds do. I don't know what mutual funds he has. Maybe he has ones that have outperformed. I have no idea. But I find that really hard to believe if he's just buying literally his allocation is 25% large cap US stocks, which the only mutual fund you're going to find for that is going to be S&P 500. And
Mhm.
it's like real estate, international, maybe it's 50% large cap and then 25% international, 25% real estate or something. Very simplistic. But
Give us the jump shot.
because I said basketball, high school basketball.
Oh. Well, hey, we got a sports, company today, so how about that?
Hey, that's true.
So
That
you wanna, I
okay,
guess we've wasted a lot of time.
we have, but
Who cares? I can do whatever. Look, people, the live streams are just shit talking, and then if I do a real video, you'll see it. It doesn't say live stream. It's a real topic then. So
okay. So I was at this conference, and the thing of the conference wasn't specifically about cybersecurity, but then like 50% of it was on cybersecurity because that's all people are thinking about nowadays. I'm just gonna, and by like all I'm saying it's becoming more and more and more like front of mind, because I mean the tools, and I think one of the things that people haven't thought about is how much more AI and things that like the faking of voices, that stuff, which maybe it's not AI explicitly, like people call it AI, but I don't think like voice imitation, I don't know if that's really AI or what it is. But all those things, how many more hurdles they're going to have, or problems they'll cause, and that basically what you're going to have to do is buy more cybersecurity products to fix that. So like I
mhm.
know one of the things, and this could be a situation for Palo Alto, Fortinet, like all these other cyber companies. The one I'm just most familiar with is CrowdStrike. And basically, what they do is you get in with like one of their modules and they have all these other modules they can use. And like I'm literally at this conference, like we had an FBI agent talking to us. We had a guy who was the president of a cybersecurity company that just got bought up by Beasley, the cyber insurance company. And like the whole time they're just talking about all these new like ways to hack you and like all these different things that you need. And basically, at the end of the day, it's like companies are still in large companies, but like might be properly allocated, but especially SMB. SMB is way under allocated to cyber. So like one of the things he said that's really interesting, and I was like, oh my gosh, this is gonna be a must-have for every single company. Is there's like companies now in Silicon Valley, and these guys, CrowdStrike, Palo Alto, et cetera, they're gonna buy these guys out, or they're gonna have their own internal team doing this. But there's literally companies already that are saying they have the technology to one, like if I did a video call with you, if someone took like the AI generation and then like made it look like me and my voice sound like me, there's products that they have now that they're saying they can tell if it's real or not. So they're going to be able to like tell. So that's going to be a must-have that you're going to need to have for both like voice and video. And then I was like, okay, like the reinvestment runway for these cyber companies, it's like getting larger. Like normally you look at something like a CrowdStrike and you're like, well, their revenue is growing, so the reinvestment runway sometimes shrinks. Like as the revenue is growing, their reinvestment runway is growing, which I find insane.
Do you like some example? I remember there was a lawyer that wrote his whole brief using AI, and it just made up sources. So I'm like, so the investment's not the AI company. You could argue it's a company that creates a software to detect that, right? Like they could sell to lawyers, so you could run like or judge or like the government, right? Like the person that gets the brief could run a AI detection screening on documents, maybe.
Yeah. So my thought process is the way people think about AI is completely backwards. Like they're all looking like, oh wow, I can make money off of the chat GPTs of the world. And I'm like, man, I don't know. Like I'm not sold on that yet. But what I am sold on is these other, like you have to look, like it's why I like the digital bridges of the world, the ones that are like help for they're making money basically off of investment into AI. And then I'm liking things like CrowdStrike, where they're looking at more AI will impact cybersecurity. CrowdStrike will have to build modules to defend against that. Ergo, you'll have to buy that module. That's how they'll profit off of it. Yeah, like I fully agree with you. Like the concept right there, it's not the large language model that makes the lawyers brief. That is the way I think you'll make money. It's the company that makes the product that says all these sources are fake. And this is a procedurally generated like thing, like humans don't write like this or something. That's I think how you make actual money off of this. So the reason that I like, and it's more of a macro idea than it is a micro. I'm just very familiar with CrowdStrike. I stupidly sold. I bought them at 90. I stupidly sold out at 135, and I bought back in at 160. After like, I was literally like sitting there after like the third or fourth like meeting in a row at this conference. I'm like, what's CrowdStrike's trading at? Oh well, like this is a multi-year thesis that this stuff's going to become more complex. And what's going to happen, I think, is these SMBs are going to start really getting targeted. Because I think the other thing that I find interesting is if you look like maybe 10 years ago, the FBI, if you, and you might know this maybe more than I do, because I know you work in government or at least government adjacent. Don't want to call out where you work exactly, but
not the FBI, but
no, that's what I'm saying, government adjacent at least. But if let's say you had someone hack you and they're asking for $400,000, the FBI would be all over that 10 years ago. Nowadays, they're like, dude, we don't have the coverage for this. If it's not 5 to 10 million, they don't even care. Like that's basically what the FBI agent told us. He goes, so like, if I'm sure at some point these, if like it's as knowledgeable as like they're telling it to us at our conference, then the guys who are trying to hack you probably know that too. And so they're probably going to spend less time worrying about going after a large player, although like, I mean, as we see with MGM, they still do it. But it makes a lot of sense to be like, wait, I'm going to be under the threshold of them caring. Why don't I just target an SMB who's easier to hack? They send me $500,000. I get off and no one cares. So like,
yeah, like freaking going after a casino. It's just unbelievable.
Dude. And
oh my god.
And that was phishing they got him through, wasn't it?
Yeah, I think they paid somebody on the inside. They gave him like a thumb disk or something.
Oh, that
could be wrong, but that might
really
have been
that was one of our things too. We talked a lot about like rogue employees, and like that's the thing. Now, luckily, I think in my industry it's a little less common for reasons, but it's just there's so many things that you have to like. I literally have 2 pages of notes. Literally, I went to the same talk twice. The first one I just like listened to them. The second one I took notes of all the things I have to improve and make changes to at our company. Like, and I would say like for our business, we're already like compared to the average company in our industry, we're way ahead of a lot of the other ones our size. But then like I'm taking down these notes. It's like, oh, we should probably do this. Oh, we should probably do that. Oh, we need to implement this.
The state, like the state since COVID, it wasn't because of hackers, but COVID has forced us to implement cybersecurity because we have people telework now, whereas everyone was just in the office. So you just had to have the building secure, easy. But now you have people working remotely. Like I have one of these keys, you know.
Oh yeah.
And it's like a 20-bit encryption. It's nuts. Like I type in so much shit to get in.
Like a really easy thing is the 2FA. It's like, oh yeah, you should have 2FA. If you don't, I'm not going to say it's not pointless, but like it's a lot less secure. If you're doing it just by text, apparently that's a really easy thing to hack. Like if it's not a token or at least an app, if it's a text message, it's pretty easy for like a person who's sophisticated enough to like hack you to the point where they're getting the 2FA message to actually hack to get receive the text message and put that in. And so like there's and like I'm not gonna get, but we have an offsite backup then I take offline. So at least we do that much correctly. But then it's like, well, how many days? Like there's like so many different points to it. Like, well, how many days? Because what they could do is sit in your, because what they sometimes do is they just like drop a beacon into your system, they leave it there, and then they're like slowly infecting everything. So even if you have you back up your files when you take it off site, well, those backups that you took off could actually like be tagged as like they could have like something attached to them. So when you try to plug it back in, they just get those too, because you pulled out something that already had like a dormant virus more or less in it. It's just like the amount of stuff that you have to go through is really wild. So the point is like it just keeps on hitting. And like the other thing, that's what I was going to say, is what everyone's saying that you need is 24/7 monitoring. Well, who offers that? All of these big cyber companies, because the SMB isn't going to be able to do that. We're not going to be able to put on like IT guys who just sit there monitoring everything. So yeah, there's your like super optimistic for the future talk about why cyber is something you should invest in.
Yeah, well, it's kind of like I talked to Bacon about like drones, and it's like I'm not investing in companies that build drones. I'm invested right now in a company that defends against drones, because I think that's the way to go, because it's more of a proprietary technology. It's not just building stuff, little cheap drones off the shelf products, right? No, so like saying here, like on the other side, chat GTP, is that going to make you money? What's the only profitable AI investments? What, NVIDIA? Like,
no, it's now the only one. And like even NVIDIA, the reason it's profitable isn't because they're actually an AI company. It's because they sell products that enable the AI company. Which, by the way, did you hear about their office in France getting raided?
No.
That happened like today.
Jesus.
Yeah, the French government like raided their office.
My God.
For NVIDIA. I don't know what's going on exactly.
I heard some people are saying there's some shenanigans with their accounting, but it's like I have zero interest in buying NVIDIA stock separately, so I've never looked at it.
So they have historically said things like, so there's a theory that right now a lot of their like insane jump in revenue is Chinese firms basically
buying up all the stock before any sort of okay.
Now NVIDIA has said no, this isn't true. NVIDIA also said that they had no material risk to people buying like NVIDIA GPUs for Ethereum or Bitcoin mining, which we know for a fact is just false. Like the amount that those prices went down when Bitcoin took a dump. So it's like, wait, so like obviously we could say at least they're not very transparent with what they, I'm not going to say like there's shenanigans going on necessarily, but they're just not transparent with like where they get their money from.
Yeah.
But
is there any good thing he asked? So
oh,
like this talking to Andrew, I'm like, I this is a very interesting idea, and he's right. But it's like I don't have any special knowledge of like cybersecurity companies. When you guys talk about them, it's like
right.
it's all the same to me. It's just zeros and ones. So like I would, if I was going to get in, I would look at a pure play cybersecurity ETF probably.
The,
If I was going to go specifically at cybersecurity as an investment thesis.
the biggest issue I have with these is like, you know what? Do you have the? Oh, you have them right there.
Yeah, here's some of the ones I
The
pulled, the
ETFs.
biggest AUMs that pretty much. So
What's in the one that's outperforming a lot?
that is the wisdom tree one. Was that the one you
Is it
pulled up?
okay? Yeah, that's the one. Their number one holdings Datadog, which I don't really think is a. I wouldn't call that a cybersecurity company necessarily. Like, I would definitely want to have as a top holding.
So who do you think are like the top 5, like the Mount Rushmore of this right now? Let's say the top 4.
Definitely CrowdStrike, Palo Alto. See, Fortinet's up there, but I don't know. And then there's Net, which is what's the name for Net? Cloudflare, that a lot of people like a lot. You could really one of the things. So one of the things about cybersecurity is like people don't realize like AWS, GCP, those are big. Like cyber is a like security. That's a big reason people use them, is those clouds, because they protect you from that. But it's not a pure play. And so what you're trying to do is look for more of a pure play on this, which is why I went with like CrowdStrike. Like things I'd stay away from are like SentinelOne. I think that CrowdStrike is just going to eat them alive. Things like McAfee I wouldn't touch. Trying to think. Let me pull up.
It looks like the wisdom tree one, top 10 holdings. It says Elastic NV, Tenable Holdings, CrowdStrike, SentinelOne, Rapid7, Zscaler, Palo Alto.
Zscaler's good. I'm not saying good as in it's a good stock, but like they'll be in there. Okta, a lot of people like. Okta's more of a they're like your token, like more of a like the only times I've ever used Okta is the VPN like security. I'm sure they do other things.
But like most of these people, they're very concentrated. Most of these that I looked at, they're only 25, 35 holdings. So
right, because there's not a lot, because if you're a cybersecurity company and like you make a couple mistakes, you're no longer a cybersecurity company. You're just bankrupt. Like, you can't have too many mistakes there. So what ends up happening? Yeah, but like I think the reason I like CrowdStrike and Palo Alto is they just seem like best of breed. CrowdStrike is primarily going to be stuff that you put on people's computers. So they're what you call endpoint or EDR. So it's like the way. So the thing that's unique, I'm not going to say unique about CrowdStrike, but makes them better than a lot of historical stuff like the McAfee's and the other kind of cybersecurity, is the way CrowdStrike works is it monitors your computer and it will see like things that don't make sense. Like, wait a minute, why this guy, and like it'll be able to tell like they went to this website and really quickly opened up another website. Humans can't do that, and so it's going to say hold up and like pause, or it's going to like see files you're downloading that you don't normally download. Like the way I've heard it described is CrowdStrike is like security at a casino. They let everything in, but they always have people walking around watching for anyone, you know, who knows how to count cards or something, and throws them out. The historical McAfee's, etc., it's like airport security. They scan you when you come in, but once you're in, and then anything goes.
Mm-hmm. Rough. Look at this. Rough.
Alpha Dog ETF. What is this? Is this cyber?
Okay, what does it hold? Let's see. Wait, it's right here.
Oh, it's like big tech.
What?
No, it's
Alpha. So leaders in different industries.
Oh, best of breed. Okay.
Oh, I love ETFs like this. I love weird, nonsensical ETFs. This is great. Oh man, there you go.
It's
Oh,
interesting. You have like Palo Alto and CrowdStrike.
okay, honestly, I might do a review. I love these where they're like some random idea. Like there was one I found where it was like spin-offs. It was an ETF of spin-offs. Like
I like how
what?
just for the theme, they hold the best currency in the world as their highest position.
Oh my god. Wait, there's no description here. I'd have to go to their website.
What's the AUM on this? Oh, 50 million.
Yeah. Ralph. Oh my god. Yes.
Pursues what's the returns in this thing?
All right, let's
Dude,
see.
wait, what do they do? Oh, the bear runs away. Okay.
Oh my god. It has Tesla in it, so it probably did pretty well this year.
Well, it had CrowdStrike too. It had Google, Amazon.
It went up almost 12% this year. But you're paying a 1% expense ratio, so
Well, how far back does it go? Because I'm wondering how hedged they are. Because they're saying they're hedged. So like, did they still get
started October 2021? Basically, it's been going down pretty much forever.
Okay, so it wasn't like. I mean, actually, they seem pretty tech focused. To only be down 20% isn't terrible, I guess. When you literally went live at like the worst possible time.
Yeah, but you can see look at the assets on or the look at the values of these cybersecurity.
Yeah,
they're all just so tiny.
I think it's
the biggest one.
No, and I literally think it's because like people don't want to make a cybersecurity ETF because it's like there's so few companies that are like legit. I mean, so if I'm at BlackRock, it's like, dude, I'm gonna buy up the entire like companies basically.
So yeah, that I know. Like, so here's the biggest one. How many holdings does it have? It has where is it?
36.
Yeah, so that's what I was 25 to 35 was about what they all had.
And what's their percentage in the top 10? And one of their top holdings is Splunk, which will even be a thing soon.
So here's their top Infosit.
And like see like Broadcom. That's a weird like.
Oh, because of VMware.
Oh,
interesting.
But see, like that's my thing is, if I'm like a cybersecurity ETF, would I have? Well, the reason is because Broadcom, they're a really large market cap, aren't they?
Yeah.
So that's probably why they have it large because okay.
That's interesting. I will look at this because I like to put like this would fit into my Roth. Like I like to just put kind of I gotta call it something new. You got passive and active ETFs, but it's like there's a third category where it's like a methodology index, right? Like people aren't picking stuff per se, but it's like a rules-based approach. It's almost like 3 different types of ETFs.
Isn't the word like thematic?
Yeah, those two.
Yeah,
yeah. So there's like 4 or 5 different ETFs now, but like kind of my rabbit hole I've been going down lately is all these JEPI clones that have started coming now because JEPI is a $40 billion fund, huge success, and then JEPQ too. So now you're getting all these copies and they just tweak one little thing. So it's like 80% assets and then 20% of some sort of put call strategy, right? And they all have like a different spin on it.
So,
but they're popping up like crazy right now.
To be fair though, they've worked, right? So have any of them blown up? As long as they don't blow up, they work basically, right?
Are you saying like what ones have done well?
Well, JEPI, I'm just looking at.
SVOL has done well. There's a reason because
short volatility.
Yeah, you're shorting volatility.
Yeah.
So they timed. It came out at the perfect time.
Yeah.
For when volatility dropped. So like you're buying it at the top if you bought that, and that's what all these are. It's just in a certain market condition, these option strategies work.
But what I'm saying is, so they have like
terribly, but
the purpose of these is to have relatively stable price and give you a yield, right? like the Jeppies, etc.
That's what
And
they sell you.
So for Jeppy, for example, it's kind of worked. I mean, over the past 5 years, they're up 7%, which is basically flat. And they've been able, I'm assuming, to pay out whatever their yield is. I don't know what it is.
Yeah, they pay out the equity link notes, and then they pay out a percentage, which is the dividends.
Right. So I see why they're popping up, because like, but once the first one of these is going to blow up, it's going to happen, and it's going to be really nasty.
Like, there's been some terrible ones so far.
Well, QYLD is kind of, I don't want to say blown up, but that's an ugly. Even if you're getting a 10% yield on that, you lost 32%.
Like QYLD, RYLD, the Global X ones, they just blindly buy covered calls on the market every month. The same, it's just a computer program. So this date hits, they buy it, and then they sell it or whatever, reverse, but they just do it. So you're paying for active managed, but you're not getting active.
Is the difference, is Jeppy hedged? Do they do put callers?
No. There are some that do like protective strategies along with, they're like garbage. Okay, this one. Let me pull this one. This one does protective puts while they do a covered call for income.
That's who it is. Okay.
This is the biggest. I went on Reddit and I was like, this is a marketing scam. They're telling you have downside protection, which if any fund tells you have downside protection, like run away. And they actually deleted my because I did it on Dividend Reddit. They deleted my freaking post. They it lasted for 30 minutes and it was just, everyone's like, you're an idiot, that it has downside protection. I'm like, there is no downside protection. It's a marketing ploy. And here it is. It's just even last year when there was a bear market, it still got pulverized. Like,
to be fair, Dan, like you're probably the maybe first like dividend investor I ever met who's like has critical thinking. No offense to your I remember the first time like I saw you in the Discord, you're like, I only invest in companies with dividends, and I was like, oh, he's one of those guys. Like,
it's changed
out there buying
buying
Verizon and stuff. But
I did have it. I had all sorts of garbage. Like, it's just the people now you're seeing were me like 15 years ago, and they're going through the process now. So
okay,
like you're seeing it with Ryan Williams right now. Ryan Williams is talking about dividend growth now when he wasn't doing that a year ago. And I asked him about it on exit liquidity. So he's adapting and he's realizing what works and what he should be pursuing. It's a learning curve, I guess.
Oh, did you have him on?
Exit liquidity? We had him on. We had him on one of them, I think in June. Jesse had him after too.
Okay.
But I mean, there's some luck in
do
picking, like my rationale for buying Pepsi and McDonald's and Lockheed Martin. Like, I wasn't even an accountant at the time, so some of it was more story driven based on my experience. It just happened to work really well. But then more recent ones are all me, like now, like Carrier and Tractor Supply and stuff. And that's more of me now investing. But
I think there is like for you, the dividends are a screener, and that's fine. For a lot of people, the dividend is like the beginning and end of where they buy something. It's like, has a dividend, cool, buy. Like, I used to be on, I think I still am on the dividend investing subreddit, and like a lot of it will just be like, what are your favorite dividend companies? And they'll like give a list and be like, why? It's like, cause dividend. Like, oh, all right.
Then. I know. I see it like Realty Income. They're just blindly buying it right now. That's the big thing. I'm like, I don't know. I could see it going further south. I'd be very worried about dumping a lot of money into Realty Income at this point. But they're all like, it went down 20%, so it's a buy, right? Because it's at value, or it's undervalued now. Surely it's like, no, like if you go look at their portfolio, they got a lot of Dollar General stores, which is not, you kind of understand what happened. They issued a lot of shares. They bought that office REIT VREIT thing. Bad idea. they if you look at their filings, like what their objectives is, and like when they buy properties, that casino deal makes no sense for realty income. It goes against everything that they stand for. And when that came out, they got pulverized for that deal too. So it's just cascading right now down.
What was the
It's not like
details of the
they're
deal?
not going to go
Just as bad?
bankrupt people. Well, like the casino deal is going to be like a mix of debt and
I said, what
preferred
was the
share
details of that?
of the casino deal.
Instead of issuing common? Yeah.
Yeah, it was like a mix of
You said the casino
different. They
deal
were
is
going
gonna
to do
be debt and
debt,
preferred
some
shares? Sorry,
share.
I cut out for a second.
Yeah. Yeah, so they did this weird mixed deal that they don't know. They've never done that, and hope it turns around for people. But so, wow, we're so far behind.
Okay. You wanna move on to No, you're fine. You
Well,
wanna
this
move on
is
to
pretty.
the SP500 sectors?
It doesn't matter. We can do an hour and a half. Doesn't matter. I'm still fighting a cold.
Oh,
but,
I'm fine.
just brief.
We'll
Any
let you skip
opinions
one.
on this? I like to revisit this every once in a while. The different sectors' performance. I haven't done
So,
this in like 3 months.
one of the things I find really interesting is how poorly utilities have done. I don't know why. Is it just because things like natural gas have gone down in price and people are projecting like that was a shocker to me is how bad utilities have performed this year.
I mean, they're debt-laden
Um,
businesses, right? So debt's coming to
uh,
roost at some point.
that's yeah. Like I know one that people liked a lot was NEE. NEE. I've never been like a big utilities person, but I know NextEra Energy. People like that one a lot, and that one's down like 30, like almost 35% year to date.
See, that's where
And I don't
covered
know what
call
the story is with
ETFs,
them.
like covered call ETFs, are a better idea for a retiree than like utility stocks, right? Like to me,
Well,
'cause that was the story
I mean,
before.
this
Oh,
year for sure.
yeah. Utility stocks, get 4%, 5%, great yield. It's like, yeah, they're debt-laden businesses that don't have growth prospects. They don't even control how much they charge for their product to some degree.
Right. Well, and that's why actually, if you're trying to get yield in retirement, there can be problems with this too. I don't think there's a perfect for anything, but a lot of times I like preferred stocks. You find
Mhm.
like some more stable. Now the problem with preferreds is that they're very like financials heavy. So there's
It is
problems there
interesting
too.
though. Here's the underperformers. So we got utilities, real estate,
Hmm.
which this S&P 500 real estate people. So like Mo doesn't know there's real estate in the S&P 500.
What do you
Uh,
mean?
well, he said in his video about ETFs versus mutual funds, I made fun of.
Hmm.
He's like, if you want real estate exposure, you have to buy a REIT asset, like of some type. I'm like, no, you don't. It's not true. And
No,
he had a freaking page of his video that showed all the sectors, all 11 sectors, and the first one was real estate.
they're so.
I don't think so.
I have a they had okay. I'm gonna take a quick sidebar. We'll go back to the conversation. They had a video where they were talking about BTI, and like as soon as they said this stat, I was like, no way, that's true. And I looked it up, and they're wrong because they were like one of the pros or the arguments they're saying for BTI was that the tobacco industry is going to grow at almost a 10. It was like 9.8 or like almost 10% CAGR until 2030. And I was like, not a chance. And I looked up and it was like 2. It was like a 2%
Yeah.
CAGR. And so
Jeez.
like, but that's literally what they have on their video about it. And I was like, maybe in some countries, like maybe in the countries that are like maybe India, where they're going from like a lower income country to more middle class. But yeah, they were saying like global growth. But anyways, back to they're just so poorly researched.
Yeah. That's a whole nother topic.
Oh yeah.
So what do we got here? Real estate, industrial or consumer staples. Yeah, that's the interesting. Consumer staples have gotten just obliterated this year.
Well,
A lot of the ones I've seen. So
But if you look at, okay, what's the is it XLP? What's consumer staples?
Oh,
Yeah,
I see. Oh, this is retail. XLP.
I think
Yeah. Yep.
look at it on like I feel like you need to look at it on 2-year stack because they really outperformed in 22, didn't they? And so I think all it was that there was more of an anticipation of a recession that would happen in 23. So they were getting like it's like the flight to safety type thing.
Oh yeah. Yeah.
And
I
if you
mean, pretty good.
and if you compare it to like a XLY, which I believe no, that's discretionary. Is it XLC for communications, which is the one that's outperformed this year?
Mm,
Yeah, do XLC.
is it XLC?
Yeah,
Oh, yeah. It didn't pop up the first time.
and like look at that on a 2-year stack because obviously like they've super outperformed this year. You gotta go 5 years.
Damn.
It's like they went from what 84 at the peak in 21 down to 49, and then they're back up to like it's like if you overlay staples on that, staples have underperformed, but like if you put a Sharpe ratio into this thing, I think then the staples would outperform. Like on a relative basis, like staples are so much more consistent. So, anyways, the point is I think this is more of a staples were I don't want to say overbought, but there's more allocation to them versus the communication services or tech or whatever you want to put on there.
Mm-hmm.
So I'm just saying, like, I'm not that surprised that they've underperformed because they were bought very heavily going into 23.
So really, the performers are industrials, kind of 2.5,
Mm-hmm.
and then we got that's the index. Consumer discretionary, but that's
Mm-hmm.
Tesla. That's all Tesla.
And Amazon.
Oh, yep, very true. In information tech, obviously. What the hell is this one? Orange. Communication services. So
Yeah. Communication services, Google, Meta. I think like just those two are what carried that.
I compared VU to a equal weighted S&P 500. It's just nuts. It's like the S&P weight market cap weighted is up like 14%, and then the equal weighted is up like 0.6.
That's what I've heard. Is that like if you went,
yeah.
what's the small cap ETF?
The Russell 2000.
What is the Russell 2000s ETF though? What are they looking like year to date? I'm curious. Yeah, 2.49% up year to date.
Oh,
So
it's literally
So,
all
like-
7 companies. It's wild.
as someone with quite a large share of Google and Amazon, I'm okay with that.
Well, if you go
but-
back to October, I did about as well as you did this year.
Oh, I'm sure.
Because if you bought, like I bought a lot of my industrials were from October, and you know I got similar return actually to what like QQQ for a few of them.
Well, yeah, because industrials like they were getting crushed up until that point, and then people realized like, oh, we're not having a 2008 recession.
Yeah, people thought money was going to be worthless or something.
Yeah.
I'm like, ooh, bye. Oh well. Okay,
yeah.
so the only thing I'm kind of I said this before, but like retail, not even the whole like consumer discretionary, but just retail specifically. I'm intrigued. If we get to the peak of the inflation or rates, I don't know.
What are you're saying? Retail companies you're interested in right now?
Well, like a retail ETF.
Oh, because I was going to say what your thoughts are right now on like, because like what Target's getting crushed. There's Dollar General. There's all those kind of like. Is Dollar Tree also getting crushed?
Dollar Tree.
DLTR.
Okay.
Yeah, they are.
Wait, that's Oh.
No, D is in
Oh.
DL.
I was like, what? Where are you sending
Sorry.
me?
Sorry.
Oh, they're 2 words. I don't shop at these places, people.
Yeah, so they've also gotten crushed. Not nearly as much as Dollar General, but still, I mean, down 25% is nothing to joke about.
Mm-mm.
But no, it's interesting because like if you don't count like Costco, Walmart, I think like all retail has been just crushed.
Or here's a question: what are your thoughts on electric stocks? I'm just thinking of increase of electric cars in the future.
Okay, so that's Tesla has a very high valuation that they have to get it like what's the word? Grow into, right? And this is while you're seeing Ford, Toyota, Honda just released an EV. Your competition is like, I like Rivian cars a lot, but they're selling at a negative gross margin, which is usually
Mhm.
not a great business model. So like, I think it's hard right now because on one hand, like, yeah, EVs, they're going to be where we go, or at least renewables is becoming where we go. But how we get there and like how many car companies. Actually, let's back up for a second. There is a stat somewhere on all the car companies that have declared bankruptcy. And it's insane. Like making
Mhm.
cars is not a good business.
No.
Let me
And
see if I
like
can
the
find
like
it
the
was
electric.
like it was a list.
Oh,
Oh, you
he's
mean like
talking about utilities.
utilities? I'm sorry. You said when you're talking
The
about
prob-
EVs.
so like my friend works for the utility here
So okay,
in the Northeast, and he said like they don't have the assets to build out infrastructure for electric vehicles. Like they have they've made a few
no,
small purchases for like they bought a company that builds the chargers that hang above your head on the power line, so you like could pull them down.
yeah.
But it was like a tiny
Mhm.
investment. It's not like a realistic endeavor. So like it's gonna have to come from the government or private investment, like the charging stuff and the expanded, grid. But the electric companies, no, they can't. They cannot afford to do anything major.
Um,
What
it's
the
an interesting name.
who is that? I'm gonna find out who that is.
That's gotta be Sam, right?
Yeah, yeah.
100% that's Sam.
Dildo Gaggins.
Um, and if you're also asking like companies that supply like charging stations and all of that, the only ones I found that are kind of interesting is Vontier, VNT, which permissionless was one that pointed that one out to me. Which is more of a company. They're like they help outfit gas stations with electric charging stations and stuff. Which that's like I wouldn't do ChargePoint. Isn't ChargePoint the one that's like become a Bitcoin mining?
I don't know, it's just the one I was thinking. My friend asked me about it, and I'm like, please don't. Please don't.
Hold on.
They don't
What
make
is
money.
what is? I'm trying to think. Are they the ones? There's one like they started off as one of these like charging stations, and then they turned into like a crypto mining company. It was really weird.
Hmm.
I can't remember who it was. If it was these guys or not. But if you want to look up one that I actually find somewhat interesting, it's V&T Vontier. If you look at them, they're not like a sexy company. What they do is, like I said, permissionless is the one that pointed out to me. They're more folk. They don't like. They help outfit gas stations for this. So they come in, and they actually help you like.
They make money.
Oh yeah, no, they're like and they have a dividend too.
All right, they're not diluting like crazy. All right.
No, they're actually buying back. I think a good portion of their shares. this is the one that I said I found interesting. Like, shout out to Permissionless because it was a good call out. Let me pull up like their investor presentation because let's see. No presentations. Okay, thank you. Oh, do I have to go here? Investor Day.
Steady CapEx, nothing too wild. Divestitures, that's something. Cash investing.
No, here, Investor Day presentation. So let me see if I can. This is one like I keep on saying like I find it interesting. I need to get into it. And then like I keep on having it as my teaser position. It keeps going up on me.
Oh, you want to share it?
Yeah, let me pull this up here. All right, can you see this?
Yep.
So first of all, they're primarily, if you look at like, first of all, geography, mostly North America based, where they get their revenue by, the largest section is environmental fueling, so like EVs, but they also help outfit repair solutions. And I think when they say mobility technologies, I'll double check, but I think they do like something with a POS and technology for repair solutions. So they have a slide in here somewhere where they help. Yeah, so like they basically like, here's a crappy old gas station. Look, we made it better. We added the EV terminals, all that. So they like actually help outfit gas stations, which I find, and it's like a real business. People pay them to do this. They make money. They pay.
They're not just living off government subsidies and grants from us. Yeah.
Okay, this is where it's interesting. So this is what they do. So they have POS. So they have point of sale products. They help outfit car washes, fueling sites, auto repair shops, EV charging, and I think they have a fleet solution as well. So like I actually think it's really interesting, and probably the most interesting way if you actually want to play like EV transition on a company that's not going to like blow up. And Kale's saying they own a competitor to Snap-on, which that's pretty bullish. So I remember right, Snap-on's like the one where they sell the really expensive is that the one where they sell the really expensive like repair kits?
Snap-on tools?
Yeah.
They do like they have like people in trucks run franchises, sell their tools and equipment.
Okay.
And then they have an industrial portion of their business, which someone was telling me about once.
Yeah. So I don't know. Really, I actually think it's a really interesting company. And then I think if you look, if we see in here, Sherry, this is where they're gonna, and so this is like their guidance for 2023. Yeah. So one of the things they do, I want to say they have a decent share repurchase program. Yeah, historical capital allocation. It's strategic acquisitions, 20% share repurchase. So this is over like, I don't know if this is 2 years, but if you're looking at a company, let's see, 1.7 billion, 20% of that's like 300 million or something like that. Yeah, 340 million. And if you look at their market cap, I mean, that's a material amount of buybacks. So like, it's not like a Musa where they're buying everything back, but at the same time, like they're, like you said, it's not like they're doing, it's a real company. They make real money and they give real money back to you as a shareholder, and they make money off of the EV transition. So
yeah, please people like make sure they make money, because there's so many companies that do this stuff and they're basically like, we're in position, as soon as this becomes reality, we'll make money, or government grants will come and we'll make money. But it's all like losses and share dilution. Just like the weed industry.
Oh my gosh. Well, Oh, what words are we not allowed to say on YouTube relating to industry? Are we allowed to say that word? I don't know. Doesn't matter.
I guess
But
we'll find out.
yeah. The problem with the weed industry is how they're taxed. Do you know,
Yeah.
like, their taxes are just really screwy. I have to like understand it exactly, but it's not like if I think Strongman's the one that like looked into it and he really
Yeah.
understands how they get taxed. But they're like the way he basically said is like you're never going to make money in the current structure that we have, the current like tax and legal structure for weed.
So I was looking when New York legalized weed, I was like, I'm looking for a tiny bank that is only in New York. So my thought was, because if they close all their banks outside of New York, they don't fall under federal banking regulation in the state. So I'm like, there's going to be some bank that has like 2 branches in Massachusetts and they're going to just close them so they can just get into the weed business. And I did find 3 banks that I unironically closed all their branches, like in Vermont and
Really?
Massachusetts. But then you look at them and they're like, there's nothing to this. Like, this is a shell of a company. They
They're
don't
tiny.
make money. Yeah, there's tiny thing. And like, are they even going to get a portion of the weed business? Like, it's all hopes and dreams, right? Like, maybe.
Well, I don't know. Like, it's really weird because I feel like if this current, not to get like super political, but if this current administration hasn't made any headway in federally legalizing it, I don't see it happening for a while.
No, I don't.
Because
we have a marijuana team in my building. I've talked to them.
Oh yeah,
we're all ready to go, but it doesn't matter. New York won't move until.
Well, and like it's not going to get passed under a Republican president. So like, and I tell me if I'm wrong, but I don't think there's any headway made it under the current administration.
Like, don't even have to legalize it. You could just take it off Schedule 1.
Right.
That could just be the step. And then you could get in, they could make some head. It's not happening. It's just,
no,
it's not happening.
And I'm just saying this like from an investment standpoint, if that doesn't happen, I don't think it's investable.
No. I pulled an article of the Kingdom once, and it was like $60 billion has been lost by Canadian investors in all the crappy Canadian weed stocks.
So that's interesting to me.
Like,
is it because
criminal?
Is it the same setup in Canada where it's federally illegal but like provincially legal, or how does that work?
No, it's all. I don't want to speak on it. I'm not quite sure how Canada works.
Because it's surprising to me that like Canada can't make it work. If it's federally legal there and they can't make it work, it's like, woo. But like, here's the other problem that you're having right now. My state, New Mexico, recently, I think April of 22. Was it this year? No, April 22. Weed was state, legalized it. So the rule in our city is you can't have one dispensary within 300 feet of another. And you legitimately have one every 300 feet. And I'm like, there's no way that our city can sustain this much. And like, I was even talking to someone who thinks that a lot of these are like money laundering places because you never see cars there. Like, there's never any business. So either one is, it's like primary or initial capital and it's just getting like destroyed, or it's money laundering. But either way, like these buildings are going to get shut down in like 5-10 years. But what it does is just makes everyone's margins terrible.
Yeah,
but
it's a disaster. Like, we gave permits to people to grow marijuana in New York, and now they're like, what do we do? We have our first season of crops. They can't sell them. New York, the process for legalizing the dispensaries got blocked by a federal judge. Oof. They went to like the board meeting and they were crying because they're sitting on hundreds of thousands of dollars of debt and they can't sell their products. And I'm like, well,
and it's not cheap then anymore.
No. Do you want should we skip the crypto? Do you have any comments on it?
No,
I don't think we're really
I
interested.
No, I don't think so either. And I'll be honest with you, I don't find crypto that interesting right now.
All I would tell people is they're going to have to display crypto as an intangible asset separated from all the other intangible assets. This is what FASB changed, which is the governing body for accounting.
Right.
So you'll be able to see what, your businesses have outside, because intangible assets was never intended to be like Bitcoin.
Well,
It was supposed to be like patents and things like that.
did they make it? I can't remember. Did they make it so that you can mark up your crypto
Um,
assets?
right here, present gains and losses on crypto assets and net income, and present gains and losses separately from income statement effects of other intangible assets, such as amortization or impairments.
Okay,
So
so they do mark to market
yeah,
essentially on those.
yeah. So they're making them
Because
you're pulling it out of the other sections, which is nice, I
well, because
suppose.
the previous thing that was an issue in like I don't know why you would be. There's reasons, I guess, if you're a crypto mining company or something like that. But the problem was you have this on your balance sheet and you can't mark it up. You could only mark it down. So then, like, you'd have like your balance sheet be all funky because it's
Mhm.
like you have Bitcoin that's on your balance sheet marked at 10,000, but it's actually worth 40,000 as a simple example per
Yeah.
Bitcoin because you can't.
Because like a
Um,
patent, intangible asset, like a patent was never you got the patent and then
right. You don't
you
mark it up.
you depreciate it or whatever, that's impair it,
Right.
right? Is it
Right.
impaired?
Exactly.
Yeah.
Yeah. A patent, I think you actually amortize over time because they have a lifespan.
Okay.
Goodwill is one that you impair.
That's okay. Yeah.
Yeah.
So the only thing that I thought was is people were watching this, and there's been the
Mm,
federal cases about crypto saying they've been unfairly treated. So as soon as the court cases went their way,
mhm.
some of the Bitcoin assets that were the market cap was less than the value of the crypto in them. So
Mhm.
Grayscale was one of them. So it had this huge jump, which I don't know if it got
Yeah.
over that hurdle. It's probably still worth less than the value of the crypto because it's not fully these
Yeah.
ETFs have not been approved. You're still the risk of it not happening, just like marijuana, just like all this other crap we talk about.
There's there's this thought that you have to be first to make money in something, and it's just not
Mhm.
true. Like,
Yes.
okay, if you were the first person in Bitcoin, you would have made money unless you held it in that one exchange where you lost all your Bitcoin or that other exchange that also went belly up. But if you made it through all that, then you would have, yes, you would have made money.
Yeah.
Um, but like even people that, I mean, the amount of people that actually bought Bitcoin when it was like $1 and actually held it today is so small, anyways. But like
It makes me
generally,
think
and I'm
though,
not
because
saying
like,
that.
oh, go ahead. I thought you were done.
No, no, I was just gonna say it doesn't mean that you have to buy in early. I mean, you can make money that way, but and I'm not saying that Bitcoin 100%. Like I'm not this massive Bitcoin bull or anything. I'm just saying like as a generality, you can make a lot of money in something after it's proven. You didn't have to
Mhm.
be in Apple when it was trading at $1 a share. You could have gotten in when it's still $100 billion company and made a lot of money.
But man, if they allow these ETFs, these crypto ETFs, and all these, oh my god, just
Hmm.
all of a sudden, people don't have to have wallets to be in crypto.
Yeah.
And then options trading on crypto, for God's sakes. Oh my God. And then we're going to get 3x leveraged Bitcoin from that
Oh,
direction ETF. Then you could
but
short it. And it's just,
yeah, it'll be
it's
fun.
coming. Like, do I know how to play it? I don't know. But then there's the risk of people like it could not it might not ever happen that they get allowed to make crypto ETFs because we're not there yet.
Yeah.
Anyways. All right, there's rate hikes, blah blah blah. Are we near the top? Who knows?
I will say
They said
I
we're not. I mean, they said they're going to keep going.
and
2% is
no one
still the mission statement. 2%
and no
inflation.
one believes them. I'm not saying that I necessarily think they'll raise, but if they do raise, I don't think the markets are ready for it.
Well, I saw the so you're in Fabio's TLT. You said no one believes them, but like look at the tanking of TLT.
That's true.
So like this for people long-term treasuries. So if you were to think rates are going to start dropping, then you think this is going to get better. Right? I'm not the bond person, but you would want to buy this if you think rates are going to go down.
No,
If we're at peak.
that's Steve Van Meter who's the bond king. No, I'm just kidding. Um,
I'm not I'm not a bond guy.
no, if so, yeah, this is inverse to yields, right? So if yields go up, this thing goes down. If you think that we're at the top and yields are going to start going down, this will go up. So,
There's
but
an
the thing,
option version of this too if you want.
well, you can just get options on TMF. Why would you do it on TLT?
You're gonna love this. Here you go. TLT options. Bam.
Wait.
I'll show you the holdings. Look.
Interesting.
Now it's an option fund. They don't just do treasuries or bonds or stock options. It's like this fund that they can do anything basically option wise. So they're doing TLT. You can see what put, call, put. Freaking, it's wild.
Is it called high? Because that's what they do before they like go and they just like snort some cocaine and just go and like buy some options.
Who's doing this crap? Some dude's like, yeah, I can do options.
This looks like a guy just did a line and he goes out and does some 0 days to expiry options.
We're gonna do TLT options. Whoa. Oh, wild. Who knows? Should we skip? All right, we should skip. I'll have to save my TKO for a different time.
No, just give me like a 2-minute.
Okay. Good thing I spent an hour prep. No, I didn't. But I'll probably. I'm not doing stock videos. I might talk about this on a different live stream. I'm interested. Like I've been researching it behind the scenes, and then it had the huge drop off from like 100 to 85. So it kind of really was on my radar at that point. Just some of the things I'm aware of. I had this awesome chart about dollars per like viewership numbers. I can't find it, but like most profitable sports. So this is the idea, is that not just revenue, because revenue is just based on size of a sport, but like profit wise, wrestling and boxing and MMA are some of the most profitable sports in the world at this point. Which actually Formula One, if they ever went public, their numbers of like fan numbers and profits and revenue, oh my god, it's like impressive. But you could so these are like some of the most wide profitable businesses, these three.
How are they calculating profit? Is that how are they calculating that?
This article I didn't really get into yet, but I'll show you here.
No, because if you go back, it says, okay, it has it here. Okay, go ahead.
Yeah. So this was like a few months ago. They're called TKO Holdings. This is like the stupid name they had at the time. So this is their investor deck for going public. So you could see some of the stuff they're showing. So they're just showing these are fast growing companies. You're getting these two businesses. So you could buy Endeavor and still get access to this, or you could buy TKO. So if you buy Endeavor, you get all this, right? If you buy TKO, you just get WWE and UFC assets.
Which I will say, I think these things lose so much value when they get so diversified like that. Like, I think of all like the restaurant stocks. You're like, oh, I want Taco Bell, but then I have to have Burger King and I have to buy all these versus buying McDonald's.
Yeah, and like I have no interest in Endeavor itself. I really never cared for it. So this is much more intriguing to me. They're I couldn't find in the prospectus or anything. They're predicting double-digit growth for the foreseeable future. They didn't state anything specifically, but the way they have been growing. So like also this is talking about, okay, look, you buy these two assets, but we have all this other stuff and we can do events and we have talent agents that can work. We can have like a UFC promotion work with, some of their other endeavors. This is what they're selling you.
They own betting companies too, huh?
Yeah. So they put on events. They own like pieces of different type of like EuroLeague basketball. So you can see they're in a lot of different pies. Endeavor, not this business.
Right. Endeavor owns all of this.
Yeah. They're trying to sell you on the idea,
How much of this does Endeavor own?
So here it is.
Okay.
There's a pie, there's a chart for it. So Endeavor gets 51% of the shares, and then WWE is 49% of the shares. So it's really kind of interesting to read in the prospectus. So like Endeavor didn't buy WWE. They didn't agree upon. It really is a merger, actually.
Right.
Just Endeavor has a slight controlling interest. So some other numbers, like a lot of this is predicated on growth. They're still growing. I believe these are still rapidly growing businesses, I think, with a lot of head or tailwinds still to them. So what else I want to show you? We got to hurry up.
Yeah.
So you hear they're still they didn't project growth, but they're growing at a still pretty decent clip, double-digit growth, both businesses. Here's their split of revenue. You can see media. What's cool is so they're going to keep all the TV and rights deals separate. So SmackDown, Raw, WWE Fight or WWE Network, UFC Fight Pass, and then the UFC pay-per. It's all separate deals. So it's not like there's no risk of them doing one massive deal for UFC, WWE, and then like let's say they do a 10-year deal and then it's just like, you know, they wish they could get out of it and, you know, renegotiate if the market goes up for sport events. So they constantly are going to have new deals that they can strike for these rights, which is interesting. In the future they could sell it all to somebody like Amazon or Disney, but that's not in their plans. So,
well, no, because the whole thing about these that makes them interesting is like they make so much money off PPV, don't they? Pay-per-view.
Oh yeah.
And so like,
so whereas, both businesses are pay-per-view, a lot of pay-per-view money coming in.
And I find that interesting that you have an audience that agrees basically to say, we'll pay $70 per event. You're not going to find anyone in the NFL like, I mean, well, people like buy tickets and stuff, but they're not paying $70 to watch their team. I mean, some people will, but the vast majority aren't.
From what they're very diversified businesses. Like you said, pay-per-view, and then they've got the Disney deal for the UFC. Like here, right. They have sponsorships. They have they have a website, Fight Pass, with subscribers. WWE, SmackDown, and Raw are separate deals. And then they have their own streaming service that Comcast bought rights to. So they have all these different streams of funds. It's not just like a football game, ticket revenue, and then the TV deal. They get more stuff than that. But
I just wish there's part of me that's like, man, it'd be so cool if Endeavor wasn't the controlling interest and they just switch betting partners and buy one and own it, because that would be such a massive. But go ahead.
What's interesting, they compare themselves a lot in the different filings to F1, because that's the comparison they're making to young active fans, because their fan base is, you know, younger than like the established sports. So that's what they're selling you. I know that's debatable, I think. So what else is interesting here? So just like the idea they have a talent agency, their talent agents can work with the stars. They can have WWE stars go to UFC, cross promotion, stuff like that. They're going to be on they could be on like 5 different networks depending on how their TV deals work out. So they're across quite a bit of platforms, right?
Right.
And they're going to have new deals every once in a while. Their profit, their EBITDA margin is over 20% from their filing. So we haven't had a quarter yet since they did the merger, like a real quarter. So we'll see. So the only company I could compare them to is Manchester, because that's the only thing I could find. Like Manchester United is publicly listed. I think their EBITDA margin was like 16%, and this business is saying over 20. So they are cash flow machines, is what, you know, we're hoping here.
Right.
So we'll see. And then you can see their priorities: organic investment. So last is M&A, which I like. They said it's on the table that they could someday get their fingers into some other sport. So it's not strictly those 2 sports. It could be more. But it's on the last ring of their, you know, totem pole here. So we'll see.
The only thing they could buy would be like boxing. That would make sense. And like, I don't see that happening.
Yeah. But what's cool about this, like, you can't buy sports, right? You can't buy the NFL. You can't buy the NHL. You can't buy a piece of NASCAR.
Right.
So this is like or box. Like, this is it. This is your opportunity to buy a worldwide professional sport besides like a team stock. The concerns. Yeah. So
yeah, I see it.
So they're going to take on $2.7 billion of debt. In this
classic spinoff move.
I don't see they didn't really list well that I could find today what the particulars are of that, but it was just the prospectus. So I'd like to see more on that. Just some of it makes me nervous because their cash flow isn't as great as they say it is, but they're hoping that they'll get $100 million a year in savings by the synergies, you know, for the 2 businesses merging.
Sure.
So if that happens, that'll help with their cash flow. But some of it's you got to hope, because right now all they're paying is the minimum, it looks like, on the debt. Because I was looking at their payments, it was just like 8 or 9 million, which is probably the minimum they have to pay.
Yeah, that's like nothing. Well, to be fair, it's because if I'm Endeavor, why pay off this debt early when I'm going to just put it on a UFC and then get rid of it? I'm not going to pay that off early.
Yeah.
So that could be a strategic move for. So is the combined? Who's going to be the combined? Like of the new combined co, who is the CEO? Who, like, how does that between the UFC and WWE guys? How does that break out?
Okay, so here's the board. So the board is going to be 4 WWE guys and then 5 Endeavor guys. So here's the board.
Okay.
They just approved it. No, here. Okay, this is another big negative. Vince McMahon, it's in the prospectus, is the executive chairman until death, basically, is the way they wrote it, because he's not retiring. So if you don't like Vince McMahon, and there is plenty of stuff to read in the prospectus about Vince McMahon, they lay out all his sexual harassment lawsuits and all.
Does he? I don't know much about him. He's the GIF. He's like the GIF, right? That's the only.
There's a lot in there to read about him. So they're saying a lot of it's been settled prior, but Endeavor did have to pay part of his settlements. So I need to understand that more. But he's not leaving. So if you're like, oh, he'll just retire. No, they're not. They can't force him out. It's in there. They specifically state he has such a huge amount of WWE shares. He can make substantial decisions for the company's direction by himself. So he must have a huge amount of the 49% share of that part of the business.
Wow. I didn't realize he had that much. I guess we'll find out because they'll have to list that out.
But, Endeavor does have more people on the board, though. So it's not all so they have 5 and WWE only has 4 people. So Endeavor is still running the ship on this.
And they have Robert Kraft's son on there. That's interesting.
Yeah. I guess that's Robert Kraft's kid or Jonathan Kraft. Be. Yeah. Silver Lake's co-CEO, Open Door guy. Oh, that's great.
That's not the guy that's a woman, right? Carrie, unless I'm
Carrie Wheeler. Oh, Chief Technologies.
Oh, that person, Carrie Wheeler, was only hired in December 2022. So that's nuts.
So what else? Dana White's still there running the UFC. He's just not on the board, but he's the president and CEO of the UFC. And then the guy that runs WWE is this guy, Nick Khan, who's been there for a while. Nobody's leaving. So all the players that have been there are still there. I don't know. I'm intrigued. So
it's interesting.
Like some of the analyst coverage I'm seeing, they're saying it's worth like 130 to 150 a share. So we're at 82 or something at this point.
I think the thing I like to see is, where does this thing land in 6 to 12 months? I don't know if there's any agreements where certain insiders can't sell shares for a while, et cetera, et cetera. A lot of times these things, and then you add on the fact that they basically loaded the UFC up with debt and then threw them off. So there could be a bit of evaluate or just a sell-off as that stuff kind of works itself out. Because a lot of times, this is done to give people liquidity, and they want to use that liquidity.
This part was funny. So it fell like from 100 to 85. I think it was last week. So I'm like, what the hell? So they made a new deal for their SmackDown and their WWE online streaming service with Comcast. So it's on Peacock, exclusive Peacock. They don't have subs for that WWE portion. And I guess they got 40% better on the deal, but Wall Street expected them to get 50 to 60% better on their contract. So the thing tanked $15 a share.
Wow.
But still, 40%, they're 40% better on their deal. And Wall Street was like, oh, that sucks.
Well, so how long is the deal for?
I think it's 5 years. So all the WWE SmackDown and their streaming is on Peacock and the Comcast stations. So they're in the middle of Raw. Raw is going to get renegotiated because Fox said they don't want to bid on it for now. So they have Raw that's coming up for a deal. It might go to ESPN, actually, is where I think it might go. So I think ESPN might buy it, and then they put it on FX, which could be I think that'd be a good move for Disney, honestly.
But ESPN, how can they buy anything?
Yeah.
That's,
Well, the thing
that's
they
a whole
can't
nother.
they can't put it on ESPN because they can't guarantee
Right.
what is it, every Monday would be Raw. They can't
Mhm.
guarantee that. There's no way with the football schedule.
No.
So they'd have to put it
No
on
chance.
FX or they'd have to do ESPN Plus. But then UFC's already on that. So I don't know where they would it doesn't really make ton of sense. So yeah, we'll see. Maybe 1 or 2 quarters now that we can actually see if those synergies are going to save them money, because looking backwards, they didn't save
Right.
any money on administration because they were still 2 businesses, right? So those promises of
Exactly.
savings on management, we will see. If they need that to happen, I think, from a cash flow perspective, so they can start paying some debt down. They really need to save some money in cost cutting. But they
I
have
think
big
it's really
expansion plans. If you, Dana White's done some interviews and he's like, they have big goals. Most of their revenue is still only in America. Like 90% of their revenue for both businesses.
Really?
The worldwide revenue is very small. So you could say there's still plenty of growth there.
I like it a lot. I just have this rule, especially when you spin something off that's gotten laden with debt, to just kind of take a step back and watch it.
Yeah, we know with like the Warner Brothers or the watching Warner Brothers. So
I'm thinking like let's see, what were the mistakes I made? Let's see, Olaplex was one that I made a lot of money off of. Was IAS, was watching that and just waiting for it to sell off a lot. But basically, a lot of times these things, they have a lot of indiscriminate selling pressure from people just wanting to liquidate. And so you just kind of have to wait. And then if you get to a point where it's just like, I can't turn this up, then you buy some. But me personally, I just like to watch these for a little bit because they can get.
No, I like your idea. Like I bought I bought 2 shares for a watch, and then I'm gonna wait 2 quarters. I want to see 2 filings of the actual company merge now, not the prospectus crap.
Right. And the other thing
And
is,
we'll see.
they will have synergies probably, but they'll also have like merging costs, I'm sure. So that's the other thing. It's like they'll probably look bad. But this is interesting because so Endeavor has a smaller market cap than TKO now.
It might.
It does.
Are you looking at Endeavor?
Yeah.
Oh.
It's just an interesting.
Yeah, this is the difference between, was it BAM and what was the other
BN?
one? BN. It's the same idea. So you get a portion of the business or the whole thing.
So they get like half of their market cap, or Endeavor might be interesting actually. I don't know. I have to look into it, because if you're telling me that they own 51% of a $14 billion company and their market cap's only $9.5 billion, what is the rest of their stuff just completely worthless?
Mm-hmm.
I mean,
oh, here it is. This is what I was looking for. There's where they actually say it. Expected 50 to 100 million long-term annualized run rate net operating synergies. But the only thing that pay-per-view doesn't function in other parts of the world like it does in America. Like, so they have to make TV deals, so that you can't really expand the pay-per-view business worldwide. So they have to do other deals basically. So it's a challenge, but you don't get too many options at owning like a sports. There's really not much options. You got Manchester. Like there's some soccer teams in Europe that you can buy pieces of like this, but in America, you don't really have any investments in sporting, teams and stuff.
And like the Man U's of the world, I wouldn't like. You can also get AC Milan, I think. There's a couple of, but like those those kind of European soccer clubs, they're mostly there for the ego of the person owning it. It's the same thing with like, was it the Atlanta Braves? Whatever they're.
Oh, here it is.
Buy them.
Oh, I didn't know that. I wonder if you get the stadium.
Super recent.
Interesting. Because Madison Square Garden, I don't know. I've never looked at it, but it's not the same as this investment. You probably are getting a ownership stake in the teams and just Madison Square Garden, I would assume.
Yeah. So it's interesting.
Like, see, EBITDA margin 10. whereas TKO is saying they're going to be 21 or 22. So, wow.
It is interesting. I'm actually kind of curious to see what it looks like if you look at what Endeavor looks like. So their leverage now, they're not very levered anymore because they just put, of their 5 billion of debt, they put 2.7 onto TKO, right? So now this is so like if you look at them right now, I mean the enterprise value is going to be off because it's going to say like 14 billion or 15 billion, but it's actually like 11 billion.
Yeah, I don't know which way I'd play it yet, because you could really do either one.
Well,
where is
I just have to look at what else. Like I said, I don't know if like the rest of what they have is just like garbage. I don't know enough about them.
Yeah. Are you ready for games? Let's play some.
Yes. Let's play a game.
Let me try. Okay, let me pull this up. I have another share screen window. Okay, you gave me this.
Yeah. So, buy one, short one.
So I also found a list. This is companies at 52-week highs, which was hard to find. There's way more at lows than there are highs right now. So.
Interesting.
So 52-week lows. Which one would I buy? Ooh, look, Dollar General. Ooh. Well, I did buy Disney, so I guess that's my answer.
Okay, fair enough.
Pfizer would have to go under 30 for me, because I want huge discounts, because it's a terrible investment. It just doesn't do much over time. I think they have like the second most shares of any publicly traded company in the US. Like,
really,
it's just nothing interesting.
I mean, they're pretty close. I mean, 32 isn't that far away from under 30.
Bristol Myers, no. Estee Lauder. Oh, there's Joseph's terrible choice. Yeah, honestly, I would Disney. I think I'm not really compelled by any of these other ones.
I'm not super compelled either. I don't know what is the issue with General Mills and Kellogg. Like, I would think those are pretty stable companies.
Is that just grain prices because of Ukraine? Maybe I don't know.
Maybe
I have no idea.
Because like that's kind of where I lean personally, because I don't like any of these. Like, I guess I could see myself saying Target should be okay in the future, but like, also who knows? Like, they could. So I think I would just like play Monopoly.
Oh my god, I should play this. This is the funniest thing they ever did in WWF or WWE. They had Stone Cold as a doctor. Vince McMahon was a patient. And he just pummels him with like medical supplies in the hospital room. Oh my god.
So I've never been a WWE person, but I will say they know how to put on a show. I'm gonna go with I don't know enough about the difference between the two. I guess I go with General Mills as a buy.
Ooh. How about Paul's favorite JD today?
What happened to them today?
He did a JD video, but
yeah.
No mention of VIEs or risks of China.
I don't think he knows about that.
Just throw it in your software. It's all good.
So. They're the ones that own Temu, right?
All right, who are you gonna buy and short? Because these are all at 52-week highs.
Okay, so let's see.
They should all be on screen.
Yeah, they're on screen.
Can you see them? Do I need to?
No, okay. I can see them.
Not exactly the most awe-inspiring collection of companies.
Oh man. It's all like
you see the one I talked about last time you were on? Look at it. It's right there.
Hey.
It was at 120, and then it got up to 135 after I said I was interested. So
it heard you.
I know.
Is Abercrombie and Fitch? They're like What?
Yeah, they went on a super tear this year.
Is that popular again?
I think just their plan to sell on their own website is working, or the perception is it's going to work, I think.
See, I don't know enough about half of these companies because it's a lot
Yeah.
of like
It's a lot of
natural
like
gas.
I don't really know what half of these do, honestly, but
So I'm gonna buy the company that's been like top 20 SP500 for years and years and go ExxonMobil. I know it's really boring.
respect.
And then short. Uh, let's do. I'm just gonna find like a little shitco like energy company or something, or I'm gonna go with Profite Acquisition Corp because they
Okay.
have really low volume. Like, dude, 34K volume. Oh, I guess I could have gone Natural Resource Partners LP also, but yeah, some like acquisition corp that's like a tiny micro cap. Yeah, I guess I'll just short them and hope they make a bad investment.
I'm gonna buy Watsco because they do HVAC
Okay,
stuff,
that's fair.
and then I'm gonna short Chico's because
Oh,
I don't understand what the hell they do.
what is Chico's?
Chico's FAS Inc.
Chico's FAS Inc. Oh, it's a clothing retail company.
All right, there we go. Trash.
Women's clothing and accessories retailer. Wait, did they just get like acquired or something? Oh, they're M&A. They just got bought out. That's why.
Oh, that's why it jumped out.
Yeah, because it's
Oh,
like
I'm a
up
failure.
60. It's like up 63% today. And I was like, what?
Oh, interesting.
To be fair, you wouldn't lose any money shorting it. It would just
Yeah.
get acquired at the current price, and then so it's not a bad short.
Would it be like Robinhood where they don't let you sell your contracts when something goes bankrupt? You're just like holding the bag.
Wasn't that a big issue with like Silicon Valley Bank or something?
I think so. They wouldn't let people sell the contract. It's like,
Okay. I know we're like way past time, but you just reminded me because Fabio and I have talked about Robinhood as something of an interesting investment if you believe in the higher for longer narrative, because he was looking at them and like basically they make so much money, like the amount of money they're making right now off of income from holding other people's money, like their free cash flow and I think like net income positive by quite a bit. And I can't get myself to like invest in it because the actual core business seems pretty crappy. But the actual, like, let me see their latest earnings. Let's see. Their latest earnings for Q2. Net interest revenue increased 13% to 234 million. So they're making like $1 billion a year right now off of interest revenue. So they have a positive net income compared to a net loss. So net income in Q2 of 25 million compared to a net loss of 511 million in the previous no, wait.
damn, is this the right column? Net interest income. Yeah.
Yeah.
Ooh, wow.
Yeah, exactly. So like,
Oh, Vlad, worst CEO ever. You have to value his ability to F up your whole
that's
thesis.
true.
He goes on TV, you're just like, oh, sell it now.
But like, I don't know. I mean, look at that, like the interest income, and then I don't know about the core business, but like, I mean, they're actually operating income and net income profitable now. I don't know. They really like decreased SBC as well. I don't. It's. I'm not saying go in and buy it. I'm just saying it's one of those companies that Fabi pointed out to me. Is like no one wants to touch it right now. Like maybe it's kind of interesting if you, but you have to believe that they can keep, because if the net interest revenue goes away, they're screwed.
Yeah.
So then you're like, wait a minute, do I want to place my whole thing on like the Fed not cutting rates?
Although if those crypto ETFs come out, maybe crypto goes up and then they get a lot more. But no, because then people would want to buy the ETFs instead of trade crypto though on their service, right?
Yeah.
That'd be a bad thing for them.
But they want to buy options on those cryptos.
Oh, fuck. You got me. You got me. Oh my God. Dude, can you imagine? Oh, they will put fireworks back in the phones.
Oh my gosh, they 100% will.
Ooh. Okay, are you ready to judge some portfolios?
Yes.
I know this is, I think, your
the
favorite
best
thing to do.
portfolios. Yes,
So I've got a bunch. Don't look at the names up here. So first one.
Do I okay, so I'm not looking at the name.
I have the name at the top. Don't look. I had to clip these from videos, so some of it sucks. So this is they're all pretty recent.
I mean, this one's just like QQQ and SP 500.
Yeah,
that's fine. I mean, like not a whole lot like
So this guy's basically cash S&P 500 QQQ. If people can't see it,
that's fine. I mean,
do you know who this is?
He's a guy that talks about stocks publicly?
He was financially audited by a certain small man that we know on YouTube that lives in Las Vegas. This is Caleb Hammer's portfolio.
Oh, that's Caleb Hammer's portfolio.
Yes, Graham Stephan audited him on a video. So
oh, that's interesting. So
he bought like $1 million house and then this. So that's his at. And people are like, well, you're not exactly the most stellar investor. You just make a lot of income.
To be fair, he's never said
it's fine though. I don't have nothing.
Well, he's always been a personal finance person, not an investing person. He'll even say that.
So I mean, I honestly don't think this is redundant. I really don't. Like, no. I think it's fine. They have different enough objectives.
Right. I have no problem with it.
Yeah, and there's another YouTuber. It's the Investing with Professor G, I think, and he proposes like you do a broadly diversified market, and then you do a growth fund and a dividend fund. So this is kind of the same idea, like a 3 fund. That's fine.
Yeah, it's fine.
Okay, this is. I had to stitch this together from YouTube.
I know who this is just by looking at it. Okay.
I showed Fabio this because it was on. He said it's one of his funds. It's not his whole pie.
See, that's a cope. Even though I kind of have the same problem, but okay. Really exposed to regionals, like really exposed to regional banks. Dutch Bros is the closest thing you can get to a Chinese ADR in an American company. I don't know if people realize that. Like, you as an investor in Dutch Bros, like, you have no rights. And like, there's this whole like 2 other sets of shares, and it's this really complex setup. I'm not a fan of Disney.
See, I'm confused like you because he's not a dividend investor. He talks like about growth all the time, but half of this is just
regionals.
Like high dividend regional banks. Like,
I think he just thinks that regionals are over, because if you look at the S&P or the S&P sectors, regional banks have gotten smacked. So maybe he thinks they're oversold. I'm not a fan of
the regional ETF, honestly, if I was going to do that. But
the Wingstop idea I think he has is that chicken prices will come down, but the price of Wingstop wings won't come down. So it's like an arbitrage there. But I still think Wingstop is kind of overpriced.
You see he's in the real estate, the office return, SLG, Boston Properties. But he didn't buy him at the bottom, though. So
no,
he's down.
But I don't.
Right idea, didn't time it right. So
do you know if his if this portfolio was started though when he started his Patreon?
I think so. I think this is one of his Patreon portfolios.
That could be why, because he could have been in these for a while and been up. Because he's been talking about some of these for a long time. So I'm surprised. Like, it says recent. Google, obviously, I like.
I think Amazon. Paramount. This one's weird. Paramount Group. I don't really.
I'm not familiar with them.
I don't know what the hell they are. That's not anyways,
I know this is Chris Patel.
Chris Patel. Yeah. Boom. Okay, here's one. Bam. This is an easy one. I couldn't get his Schwab account. I couldn't get a good clip, so it's not in an order. It's not allocated by percentage.
Is this Carlson?
Nope. I did not do Carlson. That's too obvious.
Well, because it's a lot of Apple. Oh, but oh no, it's not a lot. Oh, it's one share of. Interesting. Okay. This is some.
So he's kind of like a core satellite guy. Like I like the core satellite idea he's working with, because it's a lot of shada. And then he's OCD like me. I like 100.
I thought he was doing that so he could sell covered calls. I have no idea who this is.
This is a newer YouTube dividend investor, Matt Darren.
I don't know who that is.
Show his shares. This guy. He's been popping up a lot lately. His yeah. He does his editing is really good.
His last video got a lot of views. Dang.
Yeah, he's popping off pretty good. He does good work. I like his channel.
Yeah, I'll check him out. Never heard of him, so.
I mean, I think I like this. I like the concentration, and for a dividend portfolio, I actually really like this compared to a lot of the other ones you see, like you said, are a lot of really bad. Like he's kind of like me, like United Health, American Express. I see Waste Management, although I think he sold a lot of this, but Lowe's, like he's in the growth phase. Like he understands that portion. Mm-hmm. And then he's got a core, which I don't think SCHD is a core holding. I've said that before. It's not enough stocks. It's not. How
many stocks does it have?
Only 100.
QQQ's not different from that, is it?
No. I wouldn't say QQQ is a core holding either.
Not fair. It's not mine. I'm this SP500. So.
Okay, we only got a few more. Here is. You won't know who this is. This is a dividend YouTuber also.
Okay. Let me just look at the portfolio and I can tell you what my thoughts are.
Yeah, go for it.
Is it? Oh, is this the same port?
No, it's a different person. Oh, shoot. Sorry. This one.
Okay. Apple. It's fine. Altria. Okay. Oh, and he's selling calls on his. Okay.
This is a dividend and contract dude. So option divvy boy. But same as the last guy. He's pretty concentrated, which is kind of rare for dividend investors. Usually they have like 50. So it's pretty concentrated.
I don't hate any of these. I'm not a fan of NVIDIA. I think he should have sold NVIDIA, but it looks like he's got like nothing. It's like a tracker position there. So that's fine. Union Pacific is fine. Visa I actually think is really interesting right now. I don't know why they're selling off so much. I'm not a fan of Starbucks. I don't think it's bad. Like you said, it's more dividend focused, but I think it's a fine portfolio. Especially,
I think he's in his 20s, so he's off to a good start. I think. I don't have a lot to complain about. I don't think he should be doing all these contracts, but
no, and especially like, what are you gonna make $50 on this? And it's just like not even worth the time, in my opinion.
I think Lockheed Martin, and I own Lockheed Martin. I think Northrop or L3 Harris have better upside at this point.
Mm-hmm.
But it all depends, right? Who gets the 6th generation fighters? If Lockheed gets the 6th gen fighters, then yeah, it's great. So
obviously L3 Harris will get those.
But other than that, I like most of it. So this is, I'll bring him over. This guy, Antonio Invests.
Never heard of him.
All his videos are just, this is my portfolio review. So there's not like content per se. He just shows you his portfolio. Fucking, how much money does he make? That's all he does. He just opens Schwab and shows you what he's done that month.
Man.
Easy money.
All right, I'm starting a new YouTube channel.
All right, what about this one?
What the fuck?
I had to.
Fiverr?
Okay, this is a year old, but
no, I'm not a fan of this portfolio. Okay, so first of all, Twilio, like, I guess your hope is they get bought out because like they're still not making money. Tesla, I think, is overvalued. Pinterest, The only one I think AMD's like fine, and I think Google's good. Everything else on this I do not like at all.
He lost half his money on Twilio, and Fiverr
This portfolio makes no sense either. Like
no.
from a portfolio management perspective, like I'm not saying that you have to like be super, but like the hell, I just don't get this portfolio. I don't know, who is it.
This is Sasha Yanshin.
Oh, that guy.
Boom.
Oh,
Now,
I thought like
think I don't know if this is a paper account or not, because he did this like a year ago, and I don't know what broker does this, but he is.
I guess I didn't think about it at first, but it's such a small value. I guess it's fine to be this concentrated like this.
But he's like the biggest shit talker online. He's such a schmarmy dude, and I'm like, so if this is your portfolio, you're degenerate. And if it's a paper trading and you're just effing with us, you're still degenerate. Like
I thought he's a Palantir bull.
I don't know. He's a tech boy. Like
yeah. Well, I mean,
his video on Fiverr.
Let's tech boys are fine. All right. Let's not. I'm just kidding. No, Fiverr. I don't get it all. What was his?
No, his video on Fiverr. He was dissecting the chart on the presentations, and he was like looking at what the lines did to like the micrometer amount.
My gosh.
But like this is like terrible. It makes me laugh.
What Fiverr peaked at in terms of like dollars on their share? $323 a share.
Jesus.
That's like a $20 billion.
So he must have thought it would go back to that or something.
But like, I guess that was like peak like COVID outsourcing. But anyways, wow.
Okay, so these next two are Reddit people. So they're not famous, just Reddit. So tell me what you think of this. I know you love this.
Oh man, this guy is trying to retire off of this, isn't he? He's like trying to live off the dividends.
Yeah, he was like he was like about to retire, he said.
Oh.
This is what we call the cash flow rivers of money dividend person, where you don't care about the future value of the asset. All you care about is the value of the dividends they pay you, basically. You don't care about fees or nothing. Just the money in your pocket's all that matters. So
see, it's because let's see, he's got 2 for 800,000. He's got about $1 million.
Yeah. So like this one, this is like a 2% fee, this one. And I think this one was like a 2 or 3% fee.
But what he's trying to do is probably cash for like 100,000 a year. And so he's like, dude, I can retire now. He's not trying to.
Well, I think he said 200,000 or something crazy. But
dear Lord.
These are friggin' this thing. It's like, hey, if you know what you're doing, you're going to probably turn your $1 million investment into $500,000 pretty soon. But you'll get money out of it. So I don't know.
I mean, this is why so like, because those are like a 10% yield, right, on those things?
Some of these are like 15, I think. Like, I would just tell him go Jeppy. Honestly, like looking at this, just do Jeppy. You don't need diversification of option in closed funds. Like,
I mean, the way that I don't know why you need diversification, but all these I just go like PFF or something. Like,
yeah,
it's a little less yield, but you're not going to get destroyed this much. Right now's a good time to buy it. Yeah, it's bad.
Foo Hat's writing these down to buy them right now. No Foo Hat. All right, last one. It's another dividend. This one's pretty simple, straightforward. So this is like a 20-year-old, he said. So this is the opposite end. This is a guy just starting.
I'm not saying that it makes like the portfolio makes sense, but it makes sense that this is a 20-year-old who got into investing through dividends. Because like he's someone that's like, I want to buy tech companies, but I can only buy the ones that are paying dividends. That's why he doesn't have Amazon or Google.
But I give him props. He doesn't have VTI and VU, so props to you, sir. And then I like SCHD. It's not that big of a allocation. Good for you. I think DGRO is a better option, honestly. But
the most interesting ones here are like, because all these make sense. He's just going down like the top 10 holdings of the SP500, buying the ones that have a dividend. So like Apple, Nvidia, UNH, Microsoft, Visa, and which are mostly tech too. And then he's got like McDonald's and AbbVie. AbbVie is the only one that like kind of like weird.
Yeah, I was going to say that's the one that I have the problem with. I think this one.
It just doesn't fit like his theme, I guess.
I think I would replace this with Abbott Labs if I was a 20-year-old building this, because Abbott Labs has a much lower payout ratio, and I think they can recover pretty well. 20? He was in his 20s. The comments from
in his 20s. I was gonna say because like that's a good portfolio for a 20-year-old. Like,
yeah, props to this guy.
Yeah, I don't know.
Fine. There's way worse than this, people. Like,
dude, yeah.
But he's doing like a core, and then this is a satellite, and then he's like, this is a core satellite investment strategy, which I think it's great. Good for him. If he doesn't sell shit, freak out.
I like it.
So that's all I got. I could have pulled more, but I like pulling portfolios too.
No, I like looking at it and just like being like, oh, that's interesting. And then I should have pulled some from some of the real DGEM portfolios that are like, dude, you want to see?
I had one I almost pulled. I couldn't fit it on the screen. The guy had 300 holdings, and he created one of those bubble charts where it's like each bubble represents the proportion of the assets. It was so big I couldn't fit it on the page. Like, he had like $100-$200 in each holding.
Okay, so I have one to show you, but I
don't do that. Oh,
so I don't want to. Okay, I'm not going to show you the conclusion of this one, but this is one that I told him to to not keep holding this and to sell it, and he said I was an idiot. Hold on, let me find it. Okay. So this was the portfolio the guy had. That's the entire portfolio.
Oh my God.
And if I look at the date here, 2 years ago, I can I don't want to show you like the conclusion of all this because but show you off screen. But if we look at the price, so it's he bought it somewhere around here.
Oh no.
I think he almost top ticked it. I think he bought like 35. So I think in the comments. Well, he's got more than that. Like, he's also got these here. He like in total, I think had like 40 million.
Hey, he didn't lose as much as Meet Kevin.
Let's see. Okay, so he bought. Wait, so most recent price 35. So no, he bought right almost at the top. He bought like 40 million, like right at the top. So yeah, he drew that down, and I'll show you something like, because I personally gave him some shit and then told him to sell, and he told me I was stupid. But anyways, that's the only one I got for you. That makes that 20-year-olds look a lot better.
Yeah, I'm not so critical. I'm like, if I can get the gist, it's something growth related for someone that young, like any growth type strategy, more power to you. So, but yeah, like a 20-year-old shouldn't be buying Walgreens or Verizon or a utility company. Oh my God.
Oh, that's right. So like, if you look here, he also put his friend's money in this. So like he had 5 million, and then his friend was the 27 million. So he like took his friend's money and put it all in.
Why not just spy and chill? At that point, you've already won in life. Like, what else do you need?
I don't know. If I had that much money, I wouldn't be investing in stocks. Yeah, it's like,
you don't even need to do anything fancy.
Yeah.
Or the Dow Jones. Would you do Dow Jones or SPY? Would you want?
It's more.
You want the quality? No.
I would probably actually diversify. Like if I had that much money, I would actually maybe a little more complex, and like I'd have a good portion right now. 30-year treasuries would be a good portion of my
I'd
money.
probably just like do a big chunk in the
'Cause-
Dow, the NASDAQ, and the S&P.
well,
And
what's
then
the
maybe some bond plays or something.
because like what's the 30-year treasury at 4.79? So if we took like 27 million, just as an example, times you have like a risk-free 1.2 million, 1.3 million. It's not risk-free actually, but like almost risk-free, like 1.3 million you just live off every year.
Oh my God. Well,
Yeah,
I saw like
so
some article. They were like, if crypto had exploded now with these high interest rates, all these crypto coins, they got the huge amount of money, like Tether. All they have to do is just sit on treasuries now, and they just pocket straight profit, basically.
that's true.
Just holding, I think it's like billions of dollars of treasuries just to keep, and then you can just live off the yield, and then you keep the coin solvent, and you have like infinite money hack.
Dude,
But
these guys. I gotta show you something after the stream. Anything else before we go?
I'll say good stream. I want to look.
Yeah.
I'm going to look at those cybersecurity ETFs because I haven't deployed
should.
my Roth money this year, so I'm kind of interested in that actually. Interesting idea. So
Yeah.
with that said, anything else? All right. Sign off.
That's it.
So thanks for joining. I might break this up into two. I don't know. We'll have to see.
Yeah, it's not bad.
Yeah, people can watch it. Well, all right. Thanks for joining us, and we'll see you later.